Hello everyone and welcome back to another market review. This is Silent. Today we are looking at the NASDAQ December contract for 2025. We're starting off with the weekly chart. As you can see, we're still continuing to push up higher. We ended up rallying today and then pulled off of that range and created this wick so far in the week. As we drop onto the daily chart, I'll be bringing your attention to these wick levels here from today's current price action. I'm interested to see if we open today and then can respect the daily wick constant encroachment or run the buy side one more time. If we see weakness after rallying and pull back over top of this daily wick constant encroachment range, my expectations would be to start to draw down through the lower end of this wick on this doji candle we got today, and then try and fill in this small imbalance here and work its way down towards the larger imbalance that was created on the weekly open. On the 4-hour time frame, I'm bringing down that daily wick constant encroachment range and the low and the high of the daily wick as well. When we open, I'm wanting to see price see sensitivity in that range. If not, we can fill this wick to the upside and potentially push on for another higher high on the week. If we end up getting stifled in this 26,400 range and start to pull back, I'm going to be fading any attempts to rally again and start to look for the daily wick constant encroachment, the 221 level, and eventually a fill on the lower end of this wick and put some candle bodies inside that 4-hour buy side imbalance. On the hourly time frame, I've refined the 4-hour imbalance to the 1-hour buy side imbalance here, and you can see how we ran up today and then pulled off with a high, and we started closing below the mean threshold of this bearish order block here. If there's any weakness at the open, this will be our immediate target, but again, I'm allowing price to go as far as the daily wick constant encroachment. If it passes that, I'm going to stay sidelined to see another run on all-time highs. I don't want to get in the way trying to short a rally, so I'd rather wait for it to create another turning point if that's how the day is going to play out. On the 15-minute time frame, you can see how evident that on the 15-minute time frame, we can see how obvious the choppiness back and forth was today, and it consolidated all throughout the London session and the opening of New York. It was in this trading range here and then began breaking down just before lunch, and then as we get into the FOMC meeting, we drop down, and then this is the crazy price action that you see after the press conference starts. We drop down into 1 standard deviation of the Asia range lower, and then on its rally back up, we take out all of the highs and run into 1 standard deviation of the Asia range higher. It was a very back and forth today, so that's why I'm kind of just letting tomorrow initial expectations play out and then wait for something obvious to form. As we get into Thursday and Friday on the week, I'm starting to lean more bearish because I would like for the high of the week to be formed tomorrow potentially. So if this high is blown out in tomorrow's trading and we see that scenario of Thursday creating the high of the week, we can start using these Asia range projections and levels tomorrow, casting them through if we begin delivering lower. And again, the 1 standard deviation and up to 2 standard deviations would be the target. We can reach for yesterday's low as a terminus. I'm limiting my expectations for Thursday to create a high of the week and then try and trade lower and softer into today's range again. And then that may set up another drop for Friday, and that way we could target the new week opening gap if we're going to want to do a full-on reversal back into the open. On the 5-minute time frame, you can see that Asia range is marked out. After we cross over the midnight open, price rallies and then goes into consolidation throughout London. After London lunch starts, we drop down and clear out some sell-side liquidity and fill imbalance. We draw back higher, and after rejecting here, this kind of sets us in the stage of a longer term consolidation. We drop down again, take out sell side. Just as we're going into New York open, we rally upon the open and take out London's high, and then begin breaking down. There's no imbalances here yet. We rally up and break down once more with a strong market structure shift, leaving an imbalance open, and we trade lower. It attempts to drop into the new day opening gap, but gets stifled after taking London low liquidity and falls into consolidation throughout the lunch period until FOMC starts. We rally up twice. We hit the imbalance on the first time, and then price respects the upper portion of this wick for the drop lower into our hourly buy-side imbalance, and a strong reversal here, leaving an imbalance here. Price reaccumulates inside that buy-side imbalance at the lower half of this large sell-side imbalance. We accumulate there and on top of the new day opening gap before rallying higher and hitting that 1 standard deviation of the Asia range. This kind of seek and destroy price action is common on high impact news days, especially FOMC days. So on the 1 minute time frame, I've just got us looking at the New York session, and I've added our first presentation fair value gap of the morning and the afternoon. After the initial drop in the morning, we come back and retrace into that level, and that's what gives us the delivery lower. And so long as you feel comfortable holding through FOMC, you would have caught a drop into Tuesday's first presentation fair value gap of the AM session. We have a consolidation here, and then as we start to rally above Tuesday's PM opening range imbalance, we almost make it into the PM session opening range imbalance of the current day, but it drops lower and reaccumulates on top of that down close candle bullish order block, pushes up higher again, and then falls into consolidation as we end the day. And then we have a small reversal here, which kind of signals that we're going to get a run up as the earnings report is released. And as the earnings is released, we accumulate shorts inside of this first presentation fair value gap from the morning session, and it rallies above it and colors outside the lines a little bit, but then drops strongly after the earnings is reported and falls back into the new day opening gap. Alright guys, so that's going to be it for me today. Not a lot of trading done. It's very difficult. Better to stay sidelined today. If you have any questions or found anything insightful, leave a comment. And as always, like and subscribe. I will see you all tomorrow.